Hello, guys, and welcome to Tax Code Advisors podcast. So, in our last small business advisory meeting, somebody asked this question about operating agreements, and I promised that I'll record a video and I'll get back to you. And the thing is, drafting and operating agreements is out of our domain. We don't draft it for our clients. We work with attorneys to draft it for them at a very reasonable cost. So that's why I didn't want to kind of get into that and kind of focus more on the tax aspects of LLCs. But I mean, I have seen enough of these that at least I can point out some of the things that you can potentially watch out for. And, if you feel like your operating agreements are not well drafted, then, reach out to me and I can definitely connect you with one of our attorneys to clean that up for you. So no problem there at all. Okay, so let's get started. It's going to be a short video, not a lot of stuff to talk about, but definitely some of the things that you should watch out for if you have an LLC. Now, first of all, if you don't have an operating agreement, I guess that's a big one because majority of the time, then when clients come, they don't have anything at all. So we strongly recommend our customers to definitely get one drafted and get it drafted through a properly licensed attorney in your state. The attorneys we work with, they can draft it for you in almost any states out there, so no problem there at all. But if you're getting it done, through your own contacts, just make sure that that agreement includes the language for your particular state. So if you don't have one, that's where I would start with. At least get that done, and try to avoid doing it yourself or going it on online and try to use some template because it's such an important document. I mean, you created that LLC to protect yourself, and we want to make sure you are protected. And oftentimes, when I ask people why didn't they get it done, is common answer is, well, because the attorney charged $5,000. We didn't want to spend that much money. We'd rather that spend money on marketing or something else. And I can understand that. But good news is our attorneys are very, very reasonably priced, so no problem there at all. We can get that done at a very reasonable cost for you. So if cost is the reason why you didn't do it, don't worry about that too much. We can definitely help you out with that. So some of the things that we see is, if you already have an agreement, watch out for member managed LLCs. Why? Because you see, every member, including your children, if they are members, has a say in a decision. Imagine you have a toddler who's part of your LLC. I mean, are you going to ask him for permission to refinance your real estate? Probably not a good idea. So if that's how your LLC is drafted, you want to think about that for a second. Member managed LLCs require listing all members with the Secretary of State. That means you're saying goodbye to privacy. So if you're getting into a partnership with somebody else and you're drafting some documents and you're listing out your members and whatnot, if it's a member managed LLC, then their information will be publicly available. So just be careful with that as well. And do you even have permission to do that? So your members might not be even aware of that. So please make sure they do. What's the alternative? Well, you can consider a manager managed LLC. That way you retain control, even if you give shares to others. For example, maybe you have an LLC where your children are members and your in-laws are member. They can have a share in your LLC, but you can still manage it if you have a manager managed LLC. So keep in mind now, in some instances, you want to make sure that, let's say if it's a partnership, then and you make it and you set it up in such a way where you have the full control, that can have its own consequences as well. So keep that in mind. So that's why I strongly suggest that you talk to an attorney and get this properly drafted. Watch out for operating agreements that require mandatory profits distribution or covering members' tax liabilities. That can be a problem as well. Imagine you have to pay for somebody else's tax liability or some other instance like that, something that you were not planning on doing. Have a discretionary power for distribution, especially useful if a lawsuit leads to a charging order against the LLC. Now, you don't want to be forced to empty your piggy bank because of an agreement clause. So, so those we talk a little bit about this charging order protection. It's not available in every state. I think 15 states or 16 states, something like that, do have that provision where you can where you can protect yourself. And what that simply means is that if there is a lawsuit and somebody's trying to go after you, you can say, look, I'm not taking any distribution, so you can't do anything. But if the agreement is not properly defined, then there could be distributions and you could be in trouble. That means the very reason why you set up the LLC is no longer valid. So definitely you don't want no forced distribution in that agreement either. So another great reason to consult with an attorney. You probably want to consider non-pro rata distribution clause that will allow unequal distribution among members. Sometimes that's important, even for tax purposes and depending upon various kind of situations that you might run into. So that might be helpful. It's very handy if a partner or your kid doesn't want to pay out. Maybe they are going through a divorce or there's some other financial situation going on and they say, look, I don't want to get paid right now. So you don't have to be forced and pay them, right? You can take your share without splitting it 50-50 with other people. So that's also important. Now, the language of charging order is also important too, um, because if it's not properly drafted, then you can still run into some problems. So it needs to be properly drafted to prevent loss of control if a member faces legal trouble. You don't want to end up losing your LLC just because something else is going on. Without this, a legal judgment against a member could grant a creditor control over your LLC, turning your business partner into your worst nightmare. You don't want that happening. And see, I'm bringing all these up not because I want you to learn about how to draft an operating agreement. That's not the purpose here. I'm just simply telling you like how important it is. Like, look at all these situations that can actually get you in trouble. And I'm talking about people who are running businesses as well as people who own LLCs. And especially if you have a partner, I think even if it's just a husband and spouse owning together, you should still probably consider it. But definitely consider it if you're doing it in partnership with somebody else. Okay. Restrictions on transferring membership interest. You should think about that too, because what if your member wants to transfer that interest to somebody that you don't want to do business with? That can be troubling as well. Maybe you want to put in a clause that if they want to transfer, they give you some time so you can raise funds, sell it to somebody else, or maybe you can buy it out. Important, right? Because if you do that, if you don't have such a clause in your operating agreement, I mean, that's like giving someone a house key only to find strangers making pancakes in your kitchen. You don't want that. You don't want to hang around with those people because that's going to impact your business. So very, 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 very important. Um, Now, there's a tax element to it as well. So the tax provisions in your operating agreement should also match with your LLC tax status. That can, sometimes, maybe your LLC is set up as an S corp, maybe it's set up as a C corp, maybe it's set up as a partnership, maybe it's set up as sole proprietorship. Depending upon how it is set up, those kind of clauses should match with how your operating agreement is. Because if there's a mismatch, that can cause IRS issues, or maybe even creditors can take advantage of it because they can say, look, your LLC is no longer valid. So that's like, for example, wearing a tuxedo to a beach party, meaning you're just not, you're not in the right place at the right time. So simple things, but that can cause problem. Now, sometimes we see there are some guaranteeing clauses for the return of capital contribution. So that sounds like fun, but I don't think a lot of people understand that when they're structuring their LLCs. So once again, my advice is talk to an attorney. And if we are setting up your LLC, we will strongly recommend you, and we will connect you with an attorney to speak for an hour and iron all of these out, and they will draft it as part of our LLC creation for you, unless obviously you choose against that. That's your choice. But that's another reason why you want to do that. Now, having these kind of clauses where you have to give a capital back, they can backfire in certain situations, like legal situation, especially giving creditors a VIP pass to your cash. So you want to create some distance between your creditors and you. So some of these policies should be carefully watch out for. You may consider putting a provision in there to appoint officers like a president or secretary. Now, I understand that you're creating these members, and all of these members say, "Oh, we all are equal." Yeah, maybe that's so, but I think by giving them some titles, it creates some sort of authority. It creates some clarification, especially if the structure is a little bit more complex. It allows you to kind of manage this LLC in a better way. So I think it's a great ideas. These provisions allow for the appointments of individuals as officers like president of secretary, without requiring their names to be listed on the Secretary of State's website. So this lack of public disclosure offers a great degree of anonymity. So that's important as well. So I think those are some of the common things that you will see in an operating agreement. Now, if you already have an LLC and you don't have an operating agreement, especially if you have a partner, if you maybe a couple of your neighbors got together and you decided to built an LLC out and you did not think about all these, then please definitely reach out to a local attorney for help. Or, if I can be of an assistance to you, definitely reach out to me and I'll listen to you. I'll take a look at your LLC. I'll take a look at the what's going on with your tax situation, if there's any tax strategies that we should be implementing, if we need to make any kind of structural changes or whatnot. So I'll give you some basic advise on that. And if I feel like we need to involve the attorney, then I'll get an attorney on the call. If attorney doesn't need to be on call, I can always reach out to them and ask them some questions and get back to you with some basic answers. So that's kind of how we work here at the Tax Code Advisors. But like I said, for us, having a legal team is so important because you want to make sure it gets done right. You don't want to play around with it. I mean, you set up the LLC for two purposes. Number one, to save on taxes by structuring it properly. And number two is you wanted to get that protection. So like I said, today I don't want to really focus so much on saving on taxes or building wealth. That's a separate story. But more important is, Warren Buffett rule. Rule number one, don't lose money. Rule number two, never forget the rule number one. So this is really all about that rule, that do not lose money. And by not having a proper operating agreement, you can lose money. So please don't do that. Just go to taxcodeadvisors.com and reach out to us and let us help you with that. Okay. Thank you so much for watching this video and look forward to seeing you guys next time. Thank you.